Hello and welcome to Trade of the Week for the week starting Monday the 21st of January. Each week one of our analysts picks a key trade idea with a stop for the week ahead. And last week IG's analyst Josh Mahony went short on Brent crude, and he's here with me now to discuss. Josh, tell us, how did that trade go?
Yeah, it didn't necessarily work out as I would expect. Now certainly we saw that initial breakdown leading into the week. We then started to retrace higher, so certainly for me I thought that was just going to be a short-term retracement before we sell off, but we did continue to grind higher. I'll just show it on the 4-hour chart. This idea that we're going to get this breakdown, certainly it was a very short term retracement. Often when you see turning points in the markets, you see this very clear downtrend. When you see turning points, you often get deep retracements. On this occasion, that didn't necessarily happen. You can see this very shallow retracement come back into this resistance zone. So certainly this one hasn't necessarily worked out per se. We've moved marginally higher than the peak that we had from around about the Friday the 11th of January. But it's the nature of the beast ultimately. They don't all necessarily work out.
So this week you're sticking with commodities, another short trade, this time on gold?
Yeah, so in actual fact, that's the interesting thing. You often get the likes of gold and crude moving in similar directions. A lot of that is because of the fact that it's priced in the dollar. But we've been seeing the two of them are moving in very different directions. Like I said, we're seeing Brent crude moving towards the upside. We have been seeing gold performing particularly well over recent months, but we're now starting to see that unravel, and we can see this on the 4-hour chart. You can see pretty much half of November and the whole of December we've seen significant upside for this market. But with this symmetrical triangle breaking towards the downside, it points towards the idea that this market actually could start to drop in a pretty heavy manner. Now, interestingly enough, and we can see it here on the weekly time frame, we've got this descending trend line, first touch, second touch, and then around about that area would be the third touch. So we didn't necessarily touch it per se, but certainly I would say that that is something worth noting. You can see around about that 61.8 we've started to post these sort of indecision candles in the sense of these long upper shadows for those past 3 occasions. The breakdown on that symmetrical triangle, of course, that we saw on the 4-hour chart, and now heading lower. So I would say look for a break below this 1277. So I would enter my trade at 1277. If we break below that level, then that's where I'll be looking to get short.
So tell us where the stop goes.
So there's 2 ways of playing this. There's the safe way and the not so safe way. The safe way, you'd be looking to put your stops above this previous area. So let's say this most recent peak is at 1295. I'd say put it somewhere around about 1297. If you want to be safer, you put it above that 1300 mark, because that encompasses all of this. The more risky way is utilizing, and we can see it on the hourly time frame, utilizing this more recent area of resistance around about 1284. Now, if we're looking at the wider context and seeing the kind of sell-off that could come into play, let's say we're just retracing this area here. This is probably going to be on the safer side of things, and let's say we're going to come into maybe the 61.8. From here we're going to be looking at around about 17 points. So if we're looking towards the upside and we're putting our stop at that wider area of resistance, you're not going to get a great risk to reward. So despite the fact they didn't work out last week, I'll take the risk, and I always aim to try and get good risk to reward trades on. So I am more willing to take the risky option on this one and put my stops around about, I would say 1285, let's say. But remember, we need to break this 1277. Certainly an hourly close below that level is going to give me greater confidence that this market is going to head lower from here. But certainly that sort of tightening in terms of price action, and now that breakdown, the sharp drop in terms of this market, does for me signal the potential for this market to have topped out for the near term at least.
Josh, thanks for your time. That was Josh Mahony, IG analyst, talking us through his short gold trade for the week starting Monday the 21st of January. Now remember to Google IG's Trade of the Week to sign up to our weekly email. That way you'll get this trade idea direct to your inbox every Monday lunchtime. Thanks so much for watching IGTV. I'm Victoria Scholar, and remember to find me on Twitter. I'm @VictoriaS_IG for more updates. See you soon.